Welcome back to Closing Bell South Africa. Going into our crypto corner, one of the characteristics we have been accustomed to when it comes to cryptocurrency is high volatility. However, we have seen more and more institutional investors buying into this investment. On today's crypto corner, we'll be having a conversation on the investment principles that you should consider when investing in the crypto market. And for that, I'm joined by Tino Mombo, an actuarial analyst at Novara Actuaries and Consultants. Thank you so much for your time, Tino. Of course, I have mentioned the volatility that we have been accustomed to when it comes to cryptocurrency. But when one wants to invest, do they come in as a short-term investor where you are there to make a quick buck, or as a long-term investor where you are just going to stomach the deep price movements even when one person tweets and the Bitcoin tanks?
Nadi, thank you so much for having me. So it's very interesting that a lot of investors have actually come into this market mainly because they felt like they're being left behind, being left out. And, while lots of other investors are making significant profits out in this market. But it's very, very important to understand that all of those massive and high returns that we have seen do come with significant risks attached to them. And so it's greatly important to be able to understand exactly what it is that you are investing in and how exactly these blockchain technologies work before you go piling in with, all of your money into it. I would say that, we've seen institutional adoption, and I think when new investors tend to come into this market, it's important for them to focus on perhaps starting with what we call your blue chip projects. Projects that have been, in this market for a long time, that are well established, well adopted, and to begin to structure your investment portfolio starting there, and then looking to add little return kickers to your portfolio, looking at your much more interesting and new and upcoming projects.
And I mean, what are the factors that one needs to consider when they are thinking of investing in cryptocurrency?
So I think, going back to basic investment principles, it's important not to firstly concentrate all of your investments into a single project, and to make sure that you've got large exposure to the projects that do have, establishment and long adoption, attached to them. Another key principle to understand, particularly with the crypto markets, because they're so new and it's a rapidly developing space, is that if you are going to put some of your assets into it, you should be prepared to probably lose all of it. A simple example I can give you is, yesterday early in the morning, we heard the news of the Iron Finance project that completely tanked, and pretty much, that token, the Titan token, as they call it, essentially went from about $65 all the way to zero, and many investors lost a lot of money in that investment. So it is possible, these risks abound. However, when constructing your investment portfolio, start with a core portion of your portfolio and then sort of add these return kickers on the outside if you want to follow that strategy. But pertinent, read and understand the documents in relation to each project before putting so much or at least a significant portion of your investments into them.
Talking about that risk that you might lose all your money, it's like borrowing money to some people and knowing that it might not return. But we have been talking a lot about inflation, of course. That's been basically the biggest risk that investors are seeing at the moment. And Bitcoin has constantly been cited as a good store of value and a hedge against inflation. What makes it such a good store of value?
So the interesting thing about Bitcoin is that when faced with inflation, investors tend to flock into it because they know that what makes it a good store of value is its scarcity. Bitcoin has a limited supply at the end of the day, whereas if you compare it to the fiat money system, our money can be printed endlessly. So in theory, all of the money that we have can potentially be devalued and devalued endlessly. However, coins like Bitcoin, due to their limited supply, have got this characteristic that investors like, which enables it to be a good store of value. Now, if we now focus on a little bit more on that inflation aspect of it, is that Bitcoin tends to do all right when inflation is running up. But then inflation, we know what central banks tend to do when inflation is getting out of control. They start to hike these interest rates. And because Bitcoin is considered to be a risk-on asset, if interest rates start to rise, investors flop off, right? They jump out of these high-risk investments and then go into the more stable investments that are now being given greater interest rates due to the hiking interest rate hiking cycle. So Bitcoin it is difficult to pretty much determine which factor is going to be the greater one to consider. Is it the inflation side? Is it the interest rate side? In the short term, I can tell you from history that interest rates are disastrous for the crypto market.
And of course, we know another good store of value is gold at this point. Do you go with Bitcoin or gold?
It's a very interesting one as well. So, I mean, if we compare Bitcoin and gold, right, we do know that investors have had a hard time. I mean, we'd expect generally that gold should be rallying at this time when inflation is such a high risk, right? We've seen so much money printed and flooded into the world economy over the last year or so. I mean, I can tell you the Fed printed about 25% of all the money they've ever printed before. They printed it in 1 year and flooded it into the system. So it's definitely a major risk. Now, the interesting thing is that we didn't see gold rallying all that much, right? Some of the investors have actually gone with Bitcoin. So in terms of should you go Bitcoin, should you go gold, I think at this stage it really is partially a question of risk appetite. I think if you're much more conservative, less risk seeking, you go with gold. If you've got a little bit more appetite for risk, you pick up the Bitcoin.
All right, it remains to be seen where the shine is, but thank you very much for your insights, Tino. On our Crypto Corner, that was Tino Mombo, an actuarial analyst at Novara Actuaries and Consultants.